Hey, John Stevenson here, the Guaranteed Retirement Guy. Let's talk about 5 things you need to consider when choosing a beneficiary for your annuity. Okay, so number 1, I would say you have to choose your beneficiary, right? That kind of goes without saying. Now, you need to think about primary and also contingent beneficiaries. If you're married, typically the primary beneficiary is your spouse. And then of course you'll give them a percentage. Usually if you're married, it's 100%. If you have children or maybe friends or relatives that you want to leave it to in case you and your spouse both die, then you should put contingent beneficiaries in there as well. And typically when I set these up, if people have children, we'll set it up equally. And if you got 3 children, it's like, 33.5%, somewhere around there, where you basically divide it among 3 children. So with contingent, so I'm doing a 33, a 33, and then a 34 split. That's typically how you do it on that. But it's easy to do. And it's something that you should set up right when you submit your annuity application. Just makes it easier. And you need to have all of their information, date of birth, social security, ways to get a hold of them. The insurance company actually will contact them very, very fast, because if something happens to you, the coroner's office is actually going to let them know once they actually submit, your social security as someone who is deceased. All the insurance companies know right then. Okay. And they will contact your beneficiaries before your spouse could. Like for instance, I had someone whose spouses died and she actually got, of course, the annuity. She was a primary. And when she got a letter from the insurance company, it was right after her husband died. She didn't even have a chance to tell them. And they told her first. So they're very, very efficient. They're very fast. Okay. The number 2 reason that you need to consider is the financial consequences of who you choose as your beneficiary for your annuity. So for instance, if it is an annuity that is a joint payout option, maybe you want joint income, then of course the primary is going to be your spouse. Okay, and your spouse is going to have the opportunity to continue those income payments, which is usually the best option, or just take a lump sum payout. The other option you have is if you leave the money to a minor, you have to remember that they cannot get access to that money until they are 18 years old. Okay. Another financial consequence to think about is if you're leaving it to someone who is on government benefits, that could affect their access to their government benefits. So you have to think about that. Talk to a tax professional, talk to someone like myself. You can book a call. There's a link below this video. We can chat. Okay. Number 3, you need to remember that annuities, they avoid probate because you have a beneficiary. It's kind of like an IRA. IRAs avoid probates as well because you have beneficiaries. So with a regular annuity contract, it's the same thing. You're going to avoid probate. And of course, that is going to reduce the amount that they have to pay in estate taxes. Okay, number 4. Let's talk about the payout options. Well, of course, one payout option is the lump sum. So if your beneficiaries take that all at once, they're going to pay taxes on all of it. Okay, so consider that. And another way they can take it out, especially if it's a non-qualified annuity, they have 5 years to stretch it out, or they can just wait to the end of the 5 years and take all of it out at once. So that's something to consider as well. In addition to that, of course, they can do a stretch payment where it basically pays them lifetime payments and it does it according to their life expectancy for the rest of their lives. So that is an option that your beneficiaries will have if it is a non-qualified annuity. If it's inside of an IRA, I'm sorry, they still have to take all of it out over a 10-year period, or at least at the end of 10 years. Okay, and number 5, you have to review this on an annual basis. Yes, things happen, okay? We get divorced. Maybe a child dies, okay? Things change where you have to look at your beneficiary selections and make sure they're up to date. You don't want to, get divorced and then forget to, fix those beneficiaries, change them, and have your ex-spouse receive that money. Okay, that happens. So you want to make sure that you update that on a regular basis. That's super, super important. So I hope these 5 things that you need to consider, I hope this helped. Okay, when you're looking to purchase an annuity, you're going to have the opportunity to select your beneficiaries. Okay, Sometimes we pass away before we can use the money, or sometimes we pass away while we're using it. And we need to make sure that we have the right beneficiaries, whether they're primary, whether they're contingent. And even if your beneficiary is a trust, okay, or a charity, you have to think about those as well. Okay, so I can help you with that. If you are looking to purchase an annuity and you want to work with someone like me, I'd love to help you. Go ahead and book a call. There is a link below this video and it goes straight to my calendar. Okay, we can chat about your unique situation and I'd love to help you purchase an annuity if that's something that would be right for you. If not, I'm not going to try to sell you anything either. So I appreciate you watching. I hope you like, I hope you subscribe so you can see all of my other great content that I put out on a regular basis. So until then, we'll see you next time.